Traders War Room wants to thank you, the viewer, for coming along with us on this journey. Please check out the description because all links and relevant content covered in the video will be located there, as well as all the social media platforms and some online brokerage so that you can get involved in the stock market. Just wanted to put a disclaimer out there. I am in the process of moving, so I do apologize for my workspace not being as organized as it normally is, but you guys, I'm sure, know how it is when you're moving, and definitely I look forward to giving you guys great videos when I get to my new house and my new studio. So thank you for bearing with me.
What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this year's Sunday Motivator, and we're here to talk about what's going to go down in the marketplace this week and do some forward thinking into what could possibly be good investments for the near term. What I need you to do is hit the like, share, and subscribe button right now and come join us on this team. There's a social media platform, and we got a space on all of them. So whether you're Twitter, Discord, YouTube, Facebook, or Reddit, hit that description because there's a link and you can join us. Now, as always, if you're ready, follow me and let's go to war.
Traders War Room wants to remind the viewer that all content on this channel is for education and entertainment purposes only. You are responsible for every move you make within the stock market. Trade cautiously and trade carefully, but have fun and go to war.
First and foremost, thank you guys for coming along with us on the team, and to the members that are already part of the journey, listen, you guys know exactly what's up. You guys are getting the alerts, you're getting the info, and you guys are giving us that engaging content to keep getting better and better. Real quick, I need to apologize for my workspace. Listen, I am full-blown moving mode, all right? And so I got stuff everywhere, but I look forward to giving you guys great content once I get to my new house and my new studio. So we'll look forward to that one. But right now, we're going to keep tracking along, and we're going to keep moving and doing our thing. Right now, let's talk about the buzz report and see what's hot and what's not in the stock market coming this week and near term. So let's get it.
All right, and so what's hot and what's not trending in the market space? This report's going to come from CNBC. And number one, Elon Musk suggests Tesla may have dumped Bitcoin holdings. We saw Bitcoin and the cryptocurrency as a whole kind of do some fluctuation, some violent fluctuation, not unexpected. And we see this a lot within the cryptocurrency, but make sure that we're paying attention to this. Number two, AT&T in advanced talks to merge with Warner Media and Discovery, deals expected as soon as tomorrow. This could be huge because we talked about the 5G wireless connectivity infrastructure plan that is aligned with Biden's administration, and also the whole idea is to get America back into the running. If we're not first in the world within this sector, we want to at least be in the top 5. Number 3, UN Secretary General calls for immediate Gaza ceasefire as civilian death toll increases. This could play in the role. Right now, we're just kind of watching this. This is a touchy subject, but definitely keep an eye out for those government weaponized contract stocks. Number 4, small business owners were blindsided when PPP funding ran out early. I'm not sure what that really entails a lot, but the businesses were expecting some monies that were projected to be a little lasting longer than they ended up running out. So they were kind of hit a little bit harder. So definitely need to pay attention to that and kind of look into that a little bit. And one canary in the coal mine could determine stock's next move. This is key because I've been preaching this and I keep going about this. Mining, minerals, metals. All right, mining, minerals, metals. This is going to be huge with the future and the near future and all this stuff. The EV boom, the infrastructure, all this stuff takes mining, metals, and minerals. So keep your eye on that index. That's the buzz report. Make sure you check the description so you can dive a little bit deeper.
All right, hey, next up, remember, we got principles here at TWR, planning, training, managing, securing, and right now we're going to do some training, all right? So I'm going to do some training with you on the buzzword reflation. Do you guys know what that is? I had to look it up. I got an idea, but I had to dig into it a little bit. So we're going to cover that together and go over some of the indexes and the stocks that are associated with reflation. So let's get at that right now and hit that principle training.
All right, so part of the TWR principle that we're covering today is training. And in training, we're going to talk about and understand and broaden our knowledge base on reflation trades. So reflation trade in full swing as commodities outpace the S&P 500. Demand for metals, oil soars. Man, obviously we were just talking about those metals, minerals, and mining, and now oil source. All right, so let's get into it a little bit. So what is reflation? All right, so we know there's inflation. We've been talking about that. That's kind of a dead horse. We've been beating that to death, right? There's deflation, and we kind of know that's the opposite of inflation. And then now the buzzword that's hitting around is this reflation. So let's dig into it a little bit and kind of get what reflation is. You can pause this, kind of read along, but I'm just going to hit the highlights. So basically, reflation is another term that they're using for normalization, getting back to normal. That's basically one of the big things. We've been hit hard. The pandemic has caused a lot of hiccups within the stock market. Tech stock rallied, and now the sharp decline, and now we got a stock market correction. And now this is all talking about getting back to normalization. And what it's doing is it's a quick bout of inflation to bring prices back to their long-term trend. And we've talked about that before. Remember, everyone's talking about the inflation rate, and we're going to heighten it up to bring the market back and the economy back to a normalization period. And it's only a temporary thing. It's going to fluctuate a little bit so that we can come back to normal. Every passing day, more and more Americans get vaccinated, more and more restrictions get lifted, and this will accelerate as the new COVID cases fall. Now, while we're seeing a COVID case fall, remember that it's not happening. The same thing here in the United States is happening around the world, so we definitely need to keep our eye on that. And we also need to remember that there's trillions of dollars in this stimulus plan in the Biden administration. I got a link to Biden's infrastructure and his administration in the description, so make sure you read up on that if you're not fully versed in his administration plans for the future. All right, and so 2020 brought a big tech boom, right? Everybody was riding high on tech, man. Money was being made. Technology was going off the wall. Biotech was crazy. I mean, everything was popping and locking. And then in the beginning of the year, all the stocks were up. Everything was doing well. And then March hit and everything just started bottoming out. Just like in 2020, March just started crashing down. And we seen things that we thought were going to have, huge price predictions just drop 40, 50, 60%. And we saw a rotation in the market into more value stocks. And specifically in those value stocks, we saw commodities, basic industries, and the financials. And those are the ones that big money, the Wall Streets, the institutions, those are where the money's going. And if you're smart, you're going to follow the money and make sure you guys rotate yours as well, while your growth stocks and your speculative stocks are just chilling and waiting to boom again. So I'm not saying get out of your speculative stocks. I'm not saying sell for a loss. But what I'm saying is we can only buy the dip so much. At some point, we have to just kind of sit tight, be confident in what we have, and we just need to let it ride out and hopefully recapture some of our losses. But we need to be making money in the long term while these other stocks rotate around. And the big money is going into commodities, basic industries, and the financial sectors. And so you may be asking, well, what stuff do I need to look into with this reflation? What kind of stocks can I get into while my other assets are just chilling, waiting for the rebound? Well, silver's one of them. And it's funny that we don't think of silver because we think of gold as one of those precious metals, right? And those minerals and all those things. But silver is actually huge, especially in the electronic department, because a lot of the silver industry itself, I think the thing was 24% goes into electrical components. So the silver, the Silver Trust, the SLV, this is something good. It's a little safer to get into, but definitely at the price it's at currently, wouldn't be a bad idea to get into this and put a nice little chunk of your change in there so that you can ride out some of this volatility in the growth and speculative sector. And just as I was saying, in addition to being a precious metal used in jewelry, tableware, artwork, and other collectibles, it's also important industrial metal. And you see 24% of silver demand comes from electronic components and 60% comes from all industrial uses. So definitely silver should be on your list to consider to get into at this time. And you don't know what type of commodity to get into, but this long one, Invesco, Optimum, Yield, Diversified, Commodity Strategy, No K1 ETF, long name, right? Ticker is PDBC. This right now is a good thing to get into because it covers a wide basket of commodities. And as you saw in the report earlier, commodities are where some of those value and the big money, the whales, the institutions, that's where their money's going into, these commodities. And you need to get in and ride the wave up while your other speculative and growth stocks are just chilling, waiting for the rebound. And I've hit this to death, man, and I keep preaching this, but mining, minerals, and metals. Here's another one. Check this one out. Freeport McMoran. Now, you don't have to get into this one, but this is just a prime example of what a big institution is preaching. Hey, these are stocks to consider. And this is one right here. Commodity prices tend to do well during times of inflation and reflation. Mining companies tend to perform even better as they are effectively leveraged bets on the commodities they produce. Pay attention to these sectors, and I'm going to have a slide up here in a little bit that has a whole bunch of mining industries that you can take a look at, do some DD on, and see about getting into them. Here we go again. Another one that's highly recommended in this article, Southern Copper, another metal. And I've been telling you guys, man, if you guys don't see the trend, I don't know what else I can do other than explain it. Metals, mining, and minerals. You guys need to get in this because this is going to be huge. All that infrastructure, all the EV boom, the 5G wireless, all that connectivity, everything takes these three type of things, and this is where money is being rotated into heavy. And another one that is getting a lot of, publicity and stuff, especially right now, is these commodity chemicals. So companies and industries that are dealing with chemicals, specifically the chemicals used for commodities, these are getting huge publicity right now. And I got a slide for you so that you guys can check some of these out as well. And we're talking about gas and oil refineries, right? I don't know if you have heard about it, and I'm sure you have, but the pipeline hack that happened here recently that put the whole East Coast to their knees and kind of stopped the whole movement of the oil industry, you saw prices raise quick. And it's economics 101. When the supply is down, the demand is up, the price is going to increase, okay? And this is an industry that you got to get yourself in, especially moving into the summer months, and especially with the economy starting to open up, and especially with people that have been bottled up for so long wanting to go travel and do things and go out there, man. All that takes fuel, all that takes gas, all that takes jet fuel and all that stuff. This is something that you got to get yourself in. And finally, we hit on it a little bit earlier, but finance industries, right? This one has Bank of America as highlighted, but man, there's tons of financial institutions out there that are all killing it. You need to go out there, look at a couple of them, and definitely, if you don't have a financial industry within your portfolio, you need to make sure you get at least one or at least two good ones to get in. And if in nothing else, you just dollar cost average into them and capture them dividends that come along with them. So like I promised, pause this right here, but here's some metals and mining that are doing extremely well right now. Pause, take a look at these, do some DD on these, but these are the industries. Look at those percentages, all right? These are killing it right now. This one right here is showing specialty mining and metals. Some of them are going to be the same as the other slide, but you're going to see some specialty mining and metals. Again, a lot of these are doing their thing out there, and this is an industry that is set to explode. We talked about the commodity chemicals. Look at all that green, man. These things, and listen, you see a lot of 4%, 2%, 3%, man. This is, and that's not a lot of percentage up, but man, this is consistency, okay? And especially right now, we're looking for some consistency while our inconsistent plays with the growth and speculative stocks, those are suffering. We need some consistency while we wait for those to rebound. The commodity chemicals, the mining, minerals, and metals, these offer those. This one is just chemicals. And right here we see oil and gas, refinery, and marketing. Man, all killing them, man. Definitely hit some of these clickers and make sure that you do some due diligence on these and get yourself invested in a few of these. And if not, find yourself an ETF that covers a wide range of different oil and gas refineries. Here's some more, just straight oil and gas. And we talked about the banking industry, man. Look at all that green. make sure you get yourself some financial institutions. If you're not invested in those in your portfolio, you need to. And these are just banking services.
All right, so I hope we got an idea of what reflation is and how it's going to relate to some of our picks and the rotation of money that's concerning. Now, hey, once again, it's Sunday, and what do we do on Sundays? We got the You Pick It, I Buy It. So I gave out 5 stocks in a industry that I thought was interesting, and I was just interested to see what was going to happen with this industry. So you guys picked a winner, and we're going to go over it right now. So let's see what the You Pick It, I Buy It stock winner was, and let's talk about it for a little bit. So let's get it.
And here was the list, and dun dun dun, the winner is BOXL. You pick it, I buy it. As promised, I will get this tomorrow morning at a price that I feel is the best bang for my buck once the market opens. But let's take a look at this. So we're looking at the chart. We see that it's kind of been moving sideways with some downs but some ups, and it's kind of hidden there around that $2.15 to $2.50 range. So, not bad. I'm looking at the RSI. It looks to be right there around the 50, maybe into 40s, 43, 172. MACD line, it's just popped above the center line. We got a little bit of money flow coming in, and we have some volume that's spiked a little bit, but we got volume that's pretty much consistent with the exception of a lot of negative pressure coming in at the early part of April. So let's see what we got when we dig into it. All right, let's look at some of the demographics. Looking at the market cap, notice it's a small cap. Looking at a 6.8% turnover, 52-week low, 60 cents. We got a 52-week high, $4.65. So possibly we can expect a 2x if we get lucky. We see our free float there at 101 million. Shares outstanding, 56 million. We got our next earnings in August. Looking at some of the financials, we see that the Q4 total revenues, $31 million. Q4 net income, negative $8.57 million. We notice that profitability, they're still not profitable yet, but we're noticing that they're making a little increase. Of course, 2020 quarter 3 was down, but everyone was down. Came up in quarter 4. Hopefully we can see a nice another bump, possibly into closer to being profitable in quarter 1 of 2021. All right, so we see that they're an education technology company, develops, sells, and services interactive classroom solutions for the global education market. All right, something that's hot right now and definitely isn't going anywhere because people have gotten used to it, the platforms for online education. So definitely something that I could see being forward thinking into the future. All right, we're looking at the industry, computer hardware, computer phones, and household electronics. I hate it's in that computer zone, that phone zone, the household electronics. Looking at the executives right there. Noticing that institutions own 8%, corporations 18%, insiders 3%, and others 69.54%. All right, and there you have it. So this is what I'm going to get on Monday. Good job, everyone, and I'll keep you tuned for the next one.
All right, team. Hey, that's a wrap. Enough of me chatting around and giving you guys all this info. You guys got your assignments. You guys know what to do. Listen, the main goal is to be better prepared today than we were yesterday or on Friday, whatever way you want to look at it, so that we're more profitable and we're more knowledgeable in the end. And that's only going to help us out and grow this community together. Keep giving us those comments. Keep throwing out those ideas. Make us do work for you so that we all grow together. Here at Traders War Room, we look at the stock market like it's a war zone. The stocks and the sectors, those are our battles together. We do it as a team. We attack, destroy, and conquer the stock market, and we do it through surveying, through reconning, due diligence, engaging, thought-provoking content, and we do this as a community that's fostering a true understanding of growing together and to be better prepared today than we were yesterday. I tell you guys that all the time. I truly mean it, and I live it. So, as always, if you're ready, follow me, and let's go to war together, team.